Hey, Tim Sykes here. Just wanted to do a quick video lesson. There's so much going on. I'm getting so many questions. I did a 2-hour live challenge webinar today. I hope I answered a lot of your questions, you challenge students out there. But also we have this coming up. This is the traderandinvestorsummit.com. If you go to this website, you can basically pre-register for my upcoming trading conference, live trading conference in September in Orlando. And I made a little video, and basically early birds get big savings off the price. You get discount savings at the hotel. You get a special webinar to prepare for the conference. You get special watch lists. You get an exclusive cocktail party if you're over 21. Live trading. You get my book free, and you get a 7-day $1 trial to Stocks to Trade software. So you got all of that. If you pre-register, it costs you nothing to join the early bird list. So go to traderandinvestorsummit.com. I'm so excited to meet so many of you in person. You just have roughly 48 hours left to get the early bird pricing. I also got to give props to some students. So many of you guys are really just nailing these plays, long and short. I'll get to the plays in a second. But first, I got to give props to Curtis. He nailed SPU on the short. I actually almost did this trade. Those of you who were in my challenge webinar today saw. I was thinking about actually shorting it. E-Trade had shares to short in the mid threes, and I hesitated, and the thing dropped so quickly. You got to be fast. You got to be prepared. And he, Curtis was prepared, and he made some good money. Also, Eric bought the breakout on SGY, made 1,400. He's building his own house with his trading profits. Vernon, biggest win so far. I love seeing this. This is what I love seeing. SGY was the breakout in at 8-ish, out at 10-ish for a $1,200 gain, all thanks to me and Stocks to Trade. It's you, Vernon. It's all you, okay? I'm not taking credit for anything. All I can try and do is pass down lessons and patterns and rules, but it's up to you to implement them. Here was Eric. Oh, I already went over this. Mark Crook. Got to give him props. He just passed $550,000 in profits. He is making a few thousand here, a few thousand there. He nailed the dip buy on MGT today in the challenge chat room. Those of you who are challenge students, I don't know if you realize this, or even if you're not a challenge student, there's 2 chat rooms. We have the one for the main subscribers, but then we also have the challenge chat room, which is all challenge students. Mark Crook is giving exclusive video lessons and trade alerts, and he nailed MGT. I'll go over that in a second. Also got to give props to A Wolfman. He actually, I think, bought SPU in the morning in 3 minutes while he was in Hong Kong. And I believe he said he's on his honeymoon, on his way to Phuket. And I'm going to Phuket in a few weeks too. So congrats, A Wolfman. Congratulations on the marriage. Susie P nailed SGY in the 8s, out in the 9s for $2,000 profit. And last but not least, this was Mark Crook's video lesson for challenge students, nailing the short on BSPM the other day. So now let's actually go over these stocks for a second. So BSPM has been a runner, and the key was looking for the first, red day. We had a red day here, but that was a little too soon. Right here was the red day, and you can see it's just collapsed since. The volume is fading. You don't want to just see one red day. You also want to see fading volume. So congrats to Mark Crook for nailing this, and several other students. When it takes out support, this is a key lesson for buying and shorting. This is a choppy stock. Let me get rid of the extended hours so it makes it a little easier. It's very choppy, and it loves to do morning spikes. There's tons of morning spikes. Morning spike. This was actually a midday spike. Morning spike. Morning spike, morning spike. Even on the day that it, basically fades, it does a morning spike. So right now, you'll see me geared towards morning spikes a lot because it's working in the market. But you have to be really careful when you have a morning spike, A, that fails, and then B, it starts falling off a cliff. And you can see here there's some multi-day support at 536. Here, it's kind of broken it already, but it still puts up a fight in the 530s. When it takes out the low right here into the close in the 520s, do not be long, okay? You do not want to be long stocks that are breaking through support into the close, especially when they've been up for several days and that leads to panics. So congrats to those of you who shorted into the close. And I like shorting stocks with fading volume when they take out the day low. So that was BSPM the other day. SGY was a nice spiker. You really have to look and see, breakouts and breakdowns. So I was not long SGY overnight, and, frankly, I was scared of it because it just did not break this high, and, it's up so much. I don't like energy companies, and it's a little high-priced stock for me. So you'll see in my upcoming DVD Trader checklist that's coming out in July, this does not fit the bill. But looking at it, I would not be shorting this stock near the highs. I know this was a common question in today's challenge webinar. Do not be shorting stocks near their highs when there's a possibility of them breaking out big. Same kind of logic as don't be long stocks right when they crack their lows. Be long stocks if they don't crack their lows, especially if they still finish up on the day, as I'll show you in a second. But you don't want to be shorting here, because if this is the top, okay, the top is 826 and maybe it goes down to like 8 or 780 and you make 20-40 cents. But if you're wrong and the stock spikes, look at what happens, and the thing spikes $2 a share. You could get out before $2 a share if you're short, but if you're short here at 860, literally within the first minute or two, you're down 60 cents. So shorting, you have to be very, very careful, especially with stocks that like to morning spike. We saw this in EMES during today's challenge webinar. If you look, actually, let me look at 14 days. The ultimate high here is 12-ish, and it actually looks like it topped out at 12-ish today. But if you look at a recent time frame, the high here was 11, the high here was 11.20. And, yesterday it got to 11.05 and started coming back down. Today, it was right here at the open, in the low 11s. And one of my students, Ilya, and I'm not going to, rip on you, Ilya. It's just a good lesson for you. And we all make mistakes, so it's all right. But Ilya was short, I believe, at like 11.19. And I was like, do not be shorting this stock because, again, even if you're right, let's say it fades down to 11 or 10.90 and you make 20-30 cents a share. But what if you're wrong and the stock squeezes so fast, because this is what morning spikes do, you have to get out. Within literally like 3 minutes, you're down, 40-50 cents a share. So it's very scary for me to short near the tops. I'm kind of blessed this year trading with a small account. I started with 12,000, I'm up to like 60,000. I'm not doing as much shorting because, frankly, my brokers don't always have shares to short at the best plays. And secondly, it's scary when you have a small account, okay? If you have a big account, maybe you can average up. This thing did eventually top here at 12 and it came back down and it actually finished low. But when you have a small account, you can't risk these big losses. So for me, this year, you'll see that my strategy is very different than normal. I have been doing some shorts, on CETX. I was shorting it the other day. I got squeezed, cut losses quickly. Actually, this was a good example of how quickly. This wasn't today when I was short. It was right in here. And I was shorting it on the crack here. It cracked support at 320-ish. So I was shorting in here. And I was up 10 or 15 cents, but I wanted to give it time to do a morning panic the next day. And they had some fluffy news. It wasn't much, but it was enough to spike the stock. And I was short at like 325, I think, and I covered at like 345. And it was quick because it went all the way up to 375. So I was fortunate to have, a small loss on that. But this just is a good example of why you won't see me shorting that much unless it's a blatant pump and dump. CETX has been promoted, but the reason why it spiked today is that they actually did a buyback today too. So they're doing a buyback and there's pump emails going out. Very, very tricky to short. Let me talk about some recent other spikers. BLIN, you saw me short on this day. Let me pull up a 14-day chart so you can see this kind of run up. It was already up from 74 cents to $1. I'm not going to short it into this. They had some news, but I did short this in the low threes, and I covered too soon, but it was actually a really good trade. Let me see. let me show it to you. Find ticker, BLIN. So I got a really small position. I remember 275, and I covered at 218. So I made 20% on my money, but I could not get a big position. It dropped too quickly. Interactive Brokers didn't have a lot of shares. But at least you see an example of me shorting into excessive just madness. And that was the same thing with SPU today. Very similar as BLIN. And I was looking to short this. Those of you on the challenge webinar, you saw me pull up the screen. I simply hesitated and the stock dropped too quickly and I didn't want to chase it. But I like shorting into absolute madness. That said, I do not like shorting after a stock has dropped a lot. A lot of people were like, Tim, why did you dip buy SPU? Why aren't you shorting it? You know, it's probably going to keep fading like BLIN, right? Well, it very well could. But with SPU, I saw something that I saw yesterday too. So I want to explain that. The morning low here was 260-ish, right? It broke down, came down here, couldn't really get back to 260. It tried here, failed, tried here, failed, tried here, failed. And then into the close, it actually broke 260 and finished a little bit above it. More importantly, it didn't drop that much. You know, when it drops here, 260 was really the low. And then the low was right here, you know, 252, and then the low here is like 242, and then the low here is like 248. So it's in this range of 260 to 240. So roughly a 20-cent a share range of dropping. And remember, at the open, this thing nearly hit 4. So it's already down $1.50 a share off its highs, and it looks like it's basing. If you remember my play from a few months ago, actually last summer, more than a few months ago. This was one of my best trades of last year. And this was Ford. This was an earnings winner, and it had already touched, what was it, like $4 a share. Let me see if I can see it. Do I have a screenshot? Amsterdam Ford. Well, this was my view when I was trading it. I was in Amsterdam, and it was pretty cool. And I made nearly 10 grand. Overnight. This was the play. Good. I'm glad I saved the chart. This is the daily chart. Did I show? No, I only saved the breakout. Well, I guess there's a video lesson somewhere with this. Actually, I guarantee you there is. But long story short, it went from basically, let me show you the whole chart here. It basically went from 80 cents up to $4. So the same kind of ridiculous spike as we've seen now on SPU and DELT yesterday, which I'll bring up in a second. But when you get this ridiculous spike from 1 to 4, it can easily try to come back. And if you're dip buying it towards the lows of the day, and this was an earnings winner, so it was a little different than these other low flow plays, but the pattern is the same. It can come back a little bit. And even if it doesn't, what's the risk? I was dip buying this, and I said this, bought this earnings winner, late day strength, holding its gains well. So it was holding, it was still up on the day. That's what I mean by holding its gains well. Not that it's holding all of its gains, just that it's holding up on the day and not creating new low, new low, new low. And I said tons of support in the 120s, big morning spiker all the way to 4. So maybe this can bounce. My goal was to make 30 to 50 cents a share. And if not, 10 cents a share of downside risk. I'll take it. Goal is to sell into a spike the next day. So I'm buying this at 133. And my risk is, which was pretty much the afternoon low of 120. As it turned out, it did spike. And I actually got out some after hours in 170 and some at 206 the next day. It actually went to, I think, 230. If you watch the video lesson from last August 2015. But long story short, I made 40% on my money with very, very little risk because there was support just below where I was buying. So this is the same kind of pattern as DELT yesterday. DELT had the same kind of ridiculousness from 60 cents up to 250, came down, the low here was 150, the low here was 130, the low here was 120, the low here was 111. It's actually making 3 lower lows over the course of the day yesterday. But guess what? Today it's still spiked up because it's holding its gains. So I want to be very clear about this. I'm sorry that I should have said, it's holding its lows pretty well. That's why I bought SPU. And I'm not chasing SPU at 270, 280. Okay? I'm buying it in the 240s and the 250 level. Because if I'm wrong, guess what? I lose 10 cents a share. It's the exact same pattern as Ford. It's the exact same pattern as DELT, and DELT was not holding its gains as well. So I know there are some people out there that think, oh, you should never dip buy these junk companies, especially when they're making new lows. Well, guess what? DELT, if you're dip buying it in here, even though it made a new low into the close, and I did not buy this, I did not even trade it, and I'm just looking at a pattern that worked recently, which was yesterday. If you dip bought this, even if you bought it at 127 somehow, or 125, or you really nailed the late day low here at 115-ish, guess what? You're selling it at 160 today, or 170 it even got up to, or 150. Long story short, there's 40, 50 cents a share of upside on day 2 on this spike. And, frankly, I'm actually surprised that it still finished up 14% on the day. But I'm not in this, and I wasn't in DELT at all, but I'm not in SPU for it to, hold it all day tomorrow. I'm in this for a potential spike because this is very similar to DELT. Low float stock plays can run. The catalyst for today was that they announced some kind of like little crappy merger. This is a junk company. I don't care. I'm in this for the pattern and for the solid risk reward. So when I'm buying it in the 240s and 250s, a very small position, by the way, a few thousand shares. I'm not being like, this is amazing, let me go all in. I'm buying a small speculative position with a predefined risk. If it takes out 240 or even gets close to taking out 240, I'm out and I lose 10 cents a share roughly. Woo-hoo! That's okay, because if I'm right, I think it can retest these kind of morning bounce highs at 290. So with the potential to make 40, 50 cents a share, it might break past 290. You don't know how far a morning spike can go. That's the beauty of low float morning spikes. But let's just say it tops out at 290. So if it goes to 290 and it stops, I make 40 cents a share. If I'm wrong, I lose 10 cents a share. How is that not good risk reward? 4-1. Because I have a lot of people asking me questions about this. Guess what? This is a solid risk reward trade when you have a small account. This thing, for all I know, will spike back to the 3s tomorrow, and I can make 50 cents or $1 a share. It is possible with these low float stocks. A lot of short sellers have gotten way too aggressive shorting low float stocks, low market cap stocks. Even though this was a good short into the ridiculousness in the morning. I even looked at shorting it. But now that it's dropped, $1 a share since I was looking to short it, I'm playing the volatility. And I think this is a good risk reward trade. MGT also, this was Mark Crook's gainer today. I think he made, what did he make? Like 1,500? This play has been choppy, right? I got a lot of shit for dip buying this in the 240s. It didn't really bounce when I wanted it to. It really bounced a few days after I was long. But there's nothing wrong with dip buying MGT in the 230s or 240s. Guess what? Look at this. It even made a new day low right here in the 220s. And yet it came back. So don't tell me if a stock is making new lows, it's not a buy, okay? I'm worried about potential fading and making new lows and new lows and new lows. But one little new low, and when it's failed, or when the new low is like 5 or 10 cents a share, it's not much in the grand scheme of things. That basically sucks in short sellers thinking that there's going to be a big fade, and guess what? That creates a big short squeeze. So I don't mind dip buying low float runners, and especially dip buying supernovas when they come close to holding support. DELT did not hold support, and yet somehow it still spiked 15, 20, 25% today near the market open and held on to its gains. SPU, tomorrow, could very well fail, and I will cut losses quickly if I have to. But I will do this trade again and again and again with my small account because the risk reward is solid. That is what it comes down to with a small account. A lot of people with big accounts, a lot of these short sellers, they don't realize what it takes to build a small account because, frankly, I think I'm the only multimillionaire who's trading with just a few $1,000s in order to show you how to grow a small account. And I could obviously be wrong. I'm wrong roughly 35% of the time. But if I'm wrong, I will cut losses quickly. And that, my friends, is the beauty of this. If there's some negative news and I can't help it, then maybe, guess what? That's the overnight risk. Maybe I will have a bigger, sizable loss. But the vast majority of time, I will cut my losses quickly if I'm wrong, or even take, small gains if I don't see a big spike at the open. And I'll move on to the next play. But low float after low float, it is worth dip buying sometimes. INVT is another low float. This one, you can tell, just kept fading. This is a terrible fade because the low here is 175, the low here is 170, the low here is 165, and it finishes, right at its lows, and it's breaking constantly, and there's hardly any bounce whatsoever. And INVT also has a history of failing spikes, as I brought up during my challenge webinar today. 12 separate failed spike attempts here. So this is a little different than SPU and DELT. So DELT and SPU don't have nice long-term charts, but at the same time, they can bottom. FORD, for example, when I was dip buying it last year, let me show you a 2-year chart so you can see what it was doing. It had an ugly chart heading into that. But if you're dip buying it after a huge drop and there's still some news or some catalyst that, theoretically could spike it the next day, these kinds of plays can have legs, there's just not much risk. And it astounds me that more people don't recognize this. They think that you have to trade one certain way. No, you can try every single kind of strategy and see what's working. If DELT had not done what it did today, I probably would not be long SPU overnight. But DELT did morning spike on day 2, and it was an uglier close than SPU today. So I think I have a pretty good chance. And I should mention SPU, I'm up 10, 15 cents a share. That's not what I'm going for, okay? A lot of you guys are confused. If I make or lose 5 or 10 cents a share or even 15 cents a share, that's not what I'm going for. It's a scratch. If I make 200 or if I lose 200 or if I make 300 or if I lose 300, that's not what has grown my account from 12,000 to 60,000. It's when I'm really right. That's what grows my account. And what you need to do with that is, look at risk reward. Let me show you my trades for a second. Oh, I don't want to see Ford. Get out of the Ford tickers. It helps to be able to show everything. Year to date. Well, this was my long-term newsletter, but aside from that, I was really right on TWER and PIRS. TWR I'll bring up right now because that was my most recent big winner. And I was buying this and I made roughly 30%. And TWER, completely and utterly failed the next day. And I was selling, I actually sold a little too soon in 25 and 28, and it went up to 31. After hours, it went up to 34. But guess what? This is solid risk reward. So a lot of people who hate on penny stocks, oh, never buy a stock like this. I made 30% on my money. Okay, I made a few $1,000s on like a $6,000, $7,000 investment. That's fantastic. So try to buy for these kinds of spikes, these late day spikes or these morning spikes. And if you're wrong, just cut losses quickly. That's the name of the game. You don't have to hold and hope. And especially if you're buying a stock, if you're under the PDT rule like I, used to be, and I know many of you guys are, this is why I like buying this, basically, oh, this is CETX. This is a different stock. But this is why I like buying SPU in the afternoon, because if I'm wrong, I don't waste a day trade tomorrow. So the reasons why I trade, it's a little more complicated than I can share in a quick little trade alert, but there is logic behind it. There is a plan behind it. And it's important that you know that. And I really can't wait to meet a lot of you guys in September, and also for this upcoming DVD that I'm working on every single night right now. You know, Trader Checklist is going to show you all of the key 8 indicators that I look at before every trade. And I think that it's going to really make this stuff, you know, a lot clearer. I'll see you guys in the chat room tomorrow. Thank you.